And in our top business story, Fitch Ratings has upgraded DP World's long-term issuer default rating, or IDR, to BBB from BBB-, and its short-term IDR to F2 from F3. The rating outlook from the agency was posted as stable, with the upgrade following on Fitch's announcement in November 2015 that DP World's outlook had been revised to positive from stable. The rating, according to a local report, reflects the global trade enabler's strong performance and stable cash flow generation, supported by its geographical diversification, high utilization, and the long-term high utilization of terminals, and the long-term maturity of its main flagship operation in Jebel Ali in Dubai. Commenting on the news, His Excellency Sultan Ahmed bin Sulayem, the group chairman and CEO of DP World, said that receiving the ratings upgrade by Fitch recognizes the strength and resilience of DP World's portfolio, alongside its continued progress and long-term growth potential. DP operates 77 marine and inland terminals supported by over 50 related businesses in 40 countries across 6 continents, while container handling is the company's core business and generates more than 3/4 of its revenue. In 2015, DP World handled 61.7 million 20-foot equivalent units, TEU, across its portfolio. The value of initial public offerings in the Middle East and North Africa dropped by 80% in the second quarter compared to the first 3 months of the year, according to research from Ernst & Young. There were 6 listings in the second quarter, collectively raising $397 million, with 2 listings on the Tadawul made Saudi Arabia the most valuable market for capital raised at $274 million. There were 2 listings in Egypt and 1 each in Tunisia and Algeria. Other than Saudi Arabia, no other Gulf country saw an IPO. According to EY, recent trends show that Saudi Arabia and Egypt are the key MENA markets that are likely to see the IPO activity, adding that uncertainty in the global capital markets driven by events such as the vote by the UK to exit the European Union and fluctuating oil prices may result in future uncertainty in the MENA capital markets and the potential deferral of IPOs in the MENA region. Recent development in local capital markets include a decision by Saudi Arabia to allow foreigners to invest in IPOs, while the UAE has drafted new IPO regulations. Both Saudi Arabia and Qatar have also announced plans to open exchanges dedicated to SMEs by the beginning of next year. Dubai's residential market is on the verge of an imminent increase in prices as a result of improving economic conditions and a relatively stable supply, according to a new Rating and Global Capital Partners report. The study says that recent trends in equity and oil markets and the limited supply of new completed units all point to a citywide increase in property prices in the near future. The report states that there has traditionally been little correlation between oil and property prices, but this has changed in the past 6 months, as concerns over its effect on property prices has amplified their effect on the market. It also said that there is usually a modestly positive relationship between equity markets and housing markets, but despite a 25% increase in the value of the Dubai Financial Market Index from recent lows earlier this year, house prices have remained flat. More than 60,000 units were launched in 2007 and more than 40,000 in 2008. As a result, more than 60,000 units were completed in 2008, and a further 30,000 or so per year continued to flood the market in 2009 to 2010, during a major slump. In the most recent cycle, launches and completions have been lower, with fewer than 40,000 units launched at the most recent peak in 2014. This halved to 20,000 last year and is likely to be lower again this year. Oil prices fell today as analysts doubted upcoming producer talks would rein in oversupply. According to a report released by news agency Reuters, Brent would likely fall back below $50 a barrel, as analysts stated that August's more than 20% crude rally looks overblown. Traders said that soaring exports of refined products from China also pressured prices, as this was seen as the latest indicator of an ongoing global fuel glut. Members of the Organization of Petroleum Exporting Countries, or OPEC, and other producers like Russia are set to meet in September to discuss a freeze in output levels in order to rein in on oversupply, but analysts said animosity between OPEC members, Saudi Arabia and Iran, made a deal unlikely. Because of the ongoing production and storage overhang in fuel markets, Barclays Bank said that the 20% price rally in August was unwarranted and that oil prices of $50 or higher were unsustainable. For the third quarter, Emirates NBD has an average forecast of $45 per barrel and $50 per barrel for the fourth quarter on oil prices.